The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 3rd, marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that, well, just tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, words of wisdom brought to us by our extraordinary producer who makes everything we do here at TFNN seem so seamless, and I can assure you it is not. And Al starts his day with the following incantation, and I think you should as well. He starts his day by saying, watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And finally, watch your character, for it becomes your destiny. Let's go check out the destiny of the markets here right now. We've got the Dow. Uh-oh, I lost my screen. Oh, my goodness. I can't tell you where the Dow is. I was closed out. How about that? That is a real problem. I didn't actually close it out. It looks like it closed out by itself here. So it looks like the Dow is trading down about 125 points out here. I'm going to get that back up on my chart. Sorry about that, folks. So Dow down about 125. Looks like the S&P is off 11 points. NASDAQ down about 31 out here. And momentarily, I'll have my system back up on the screen out here. So I'll just start off with some small talk. How was your weekend out there? Good? Okay, great. No, let's see. So if we take a look at gold is up about $27. So we've got the war of words right now. Well, you got a little bit more than war of words out there inside the Ukraine, with the Russian soldiers, making some advancements out there, and certainly that has spooked the market because, going into Friday, right around the noon to 2 time frame out there, we had markets that were truly breaking out. Whether it be on light volume or not doesn't matter. They were breaking above resistance. All right, we're back up and running here, so that's a good thing. So the Dow right now is up 120 points out here. S&P is down 11. Let's take a look at each of the indexes. Let's look at where we're at on a daily basis here. We've got the Rhodes Momentum Indicator charts up on my screens here. That way I can give you some numbers for us to be paying attention to. We're going to start with the NASDAQ Composite. Now, the NASDAQ Composite, very strong, super bullish mode, even still as we speak here right now. If you're watching on Tiger TV, thanks so much for doing that. If you're listening on your radio or your mobile device at TFNN.mobi, don't forget, you can catch the live stream of the show by going to the homepage of TFNN.com. Over on the upper right-hand side, you'll see a button, 3 little smartphones on that. Click on that. You will see this show streaming live to that device of yours, of course, archived on Channel 10. And the first hour is archived on Channel 9 out here. We're taking a look at the NASDAQ Composite. We're actually looking at Friday's action. So the NASDAQ Composite has been the strongest index out here. Made a higher high on Friday. But what it also did on Friday was it made a lower low than the prior session. That, folks, is what is considered to be a key reversal session out there. That is actually bearish. At least in the past, it has been more bearish out there. So that is that's bearish. That says you now have resistance up at the highs. The key number, though, to be focused at today, in my opinion, is right around the 42.58-ish type range, 42.55, 6, 7, 8, right around there. That's what you want to be focused on inside of the NASDAQ Composite. Why? You get to close below that. That bodes well for bears out there. That says you're going to see a deeper retracement, and this is just the beginning of it. That is the daily chart for the NASDAQ Composite. We're going to keep here with the daily charts as we speak right now. Let's go take a look at the Dow Jones Industrials out here. The Dow Jones Industrial right now forming a bearish engulfing bear sash candle. 16,136 is really the range to be paying attention to. You're trading out right now at 16,169, so it's not that much further below 36, 46, 56. So you got another 30 points or so out here. So be watching that. You get a close below that area inside of the Dow. That, and all of these suggest either a retracement from the lows that we saw back in February 5th, or quite frankly, because we have high volume down there, what they really suggest is a move all the way back down there. The Dow actually has an A to B equals CD to the downside that it could form, and if today is a bad close, that's an explosive move off of a C point out there. So the Dow is something we want to be paying attention to, both for weakness and or strength out here. That's what's going on inside the Dow. Let's go take a look at the transportation index. Let's go see what the transports are doing out here. Transportation setting up a huge price relative strength divergent pattern out here, and a big, huge bear sash candle that took place on January 24th. The Dow Jones transports look like this is setting up an A to B equals CD down. The actual C point is going to be the trading session here from February 24th when it created that shooting star candle out here. So we got a lot of, if you take a look at the transports, a lot of bearish resistance out here. Every time it makes its moves up into the 73.50-ish type range out here today as well. So that's what's going on inside the transports. Inside of the NDX 100, let's go see what's going on inside that. It is trading out right now. It looks like at about 36.63 out here. The level we want to be paying attention to is the 35.58 range. Now, if we take a look also at Friday's session, just like on the composite, what you see out here is you do see a key reversal session as it was making highs out there. I can tell you they're sessions. They really used to mean a whole lot. Lately here, they've been a little bit suspect, but nonetheless, you can't ignore those key reversal sessions. You've got really three things that need to take place in order to occur. You need to have an intraday session spike high above and below the prior session. Well, you've done that. You need to be in an extended condition. We have that as well, either by taking a look at the relative strength indicator or A to B equals CD patterns to the upside. And then you just need to see a close in the opposite direction of the trend that it was in. So you've got your key reversal session inside of the NDX 100. That looks like it is about to try to take on an important support level right around the 50, let's call it 36.55, just to be on the safe side. That's on the NDX 100. Let's take a look at the Russell 2000 right now. Russell 2000 off 11 points, down just under 1%, trading out at 1171.90 out here. Russell 2000 has been very, very strong. So this has been one of the, it took a while to find its engines, but boy, once it did, really on February 13th, it's been to the upside now. What the Russell 2000 has done is traded just slightly above its 3 drive to a top pattern. Nonetheless, so you got a gap down here this morning. 1165 is really the number to be paying attention to in the Russell 2000. You get below that, that's signaling to us a change in trend is taking place, at least on the daily charts here. And that's after, folks, that's after on Friday's session, even with Friday's session as it was, still leaving things in very strong bullish mode on daily, on weekly, on monthly charts out there. That's the Russell 2000. Let's go take a look at the SOX index here. Semiconductor index, this thing has been one nice, big, strong bull out here. Did form some resistance, some bears showing up here on the trading session February 24th. Little shooting star candle out there. Bearish engulfing to follow it up. That's really what you need. In this case here, that says resistance now is the high of that shooting star, which is 567.16. In the case of the SOX, it closed below 557 out there. That would suggest more retracement would be coming at us. If we take a look here at the S&P 500 right now, the S&P 500 down 16 points, down about 0.8%, 0.9% out here. That says 1837-ish is the range to be paying attention to right now. It's formed a bear sash candle out here. And again, all of these, we'll go take a look at retracement levels. It's easier for me to do that with the other charting tool that I have out here. But it does say, because we've got some volume specifically on that, I believe it's the February 3rd candles out here that have run all the way back to the tops of those candles would be a likely outcome. That's what's going on inside the S&P 500. Let's take a look here at the XAU. The XAU is trading up here this morning. That is above. The XAU is trading out at 102.09 as we speak. Still continuing its bullish stance out here. The XAU should have a little bit of resistance shooting star candle that had formed on the trading session of February 24th. That says resistance inside the XAU out at 104.34 out here. Our call number is 877-927-6648. Let's take a look at potential retracement areas here. We do start off by taking a look at the S&P 500. The S&P 500, if we go from the swing point low to the high out here, give me a moment here, I got to change that. Give me a moment to do that. If we take a look at the low that I'm using here, obviously the swing point from February 5th all the way to the high of Friday. Dead cat bounce 1818, 1787 is your 0.618 retracement level. That's where I think that the market is headed to. It's the 0.618 retracement level, and really the high of that February 3rd candle session out there at 1784. So 1784 to 1787 is the logical move, normal move, quite frankly, on any stock chart that we would take a look at out here, which is nothing more than your 0.618 retracement area. That is inside the S&P 500. We go take a look at the ETF structures. Let's do that. Let's take a look at the SPYs. The SPY here right now is trading at 184.57. Let's put the volume, see what kind of volume we have here in the first 45 minutes of trading. We have seen volume of 38 million shares. That's after doing really nice on Friday, quite frankly. Friday, we saw a push higher with 150 million shares, but we're now starting to see volume off of the highs out here, right? All-time highs, of course. You are now starting to see volume off of the highs out there. Never a good thing. If we do take a look at the SPY chart, you can go back to that February 3rd session. That's where you see that high volume bar out there, 254 million shares. You know, it's actually not the swing point low. The swing point takes you back 2 more days, February 5th. 164 million shares out there. But you're going to want to watch the SPYs as they move into that area. Again, retracement-wise, you'll see that 0.618 level of the actual swing point low to Friday's high out here. That's where it gets us right back to 178.84. And again, the high of that February 3rd, which is where I suspect the market wants to pull back to and then release some information to us, 178.37 out there. And that is in the SPY. Oh, I didn't mean to delete it, but so be it. Let's go take a look at the Qs. Let's go see what the Qs are doing out here. Qs here. We go from the its retracement levels. Let me go ahead and mark this in here. So the Qs had made a 1.272 expansion. I'll show you that, then we'll go back. The Qs here, give me a moment. So the Qs made a 1.272 expansion of a set of swing points. That's the swing point from January 22nd down to the low here of February the 5th. That low was out at 83.74. If we take a look at those 2 swing points, you'll see the expansion of the 1.272 would take you to about $90.43. The actual close here on Friday was $90.34 out there. Just kind of reverse those numbers. Now, what we're seeing here is in the key reversal session on Friday inside the Qs, generated the volume up there of 48 million shares, but in the first 45 minutes of trading, we've already done 13 million shares. If this volume pace were to keep up, what we're going to see here, what we could see here, is volume off of the highs. Not a good thing. 877-927-6648. Be right back, folks.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 167 right now. S&P off 17 points. Composite down full 50 points out here. Russell 2000 leading the charge percentage-wise, down 1.2%. So back to the Qs here. We've been trading for just under 1 hour. We've seen a volume of 14 million shares. If we were to keep up that pace, then you'd be looking at, 84 million or so, right around that range. We did 48 million shares on Friday out there. Right now you're going into a candle session from February 13th. That's got 40 million shares. So you're starting to see volume off of the highs out here. Again, that's we as you know, if you've been watching the show here for the last several years, we can go take a look at stock chart after stock chart after stock chart after stock chart after stock chart. And anytime we see volume off of the highs, what does that tell you? That tells you to get out of Dodge out there. And that is what we are starting to see here right now. We'll know by the end of the day for sure what kind of volume we have in the markets out there. We're into it's the beginning of the month, so you've got fund buying that's going on. You can see that is not producing a whole lot of help as we speak here right now at 10:25. Let's take a look at the IWM. Russell 2000 here is struggling. It's off 1 2/10% out here. You've got volume off of the highs here as well. Already 14 million shares. This had did 47 million shares as it moved higher. Now, this was taking out a very bullish or very bearish pattern here on Friday. So, on the way to a big bullish breakout, a war has broken out, and that is never good for the stock market out here. Folks, if you've never test drove Mastering Probability, go do it now. Today's a great newsletter for you to get a full study on different military conflicts over the course of history, and the patterns are easy to trade out there. So go check it out. Go to the homepage at TFNN.com. Click on my name, Steve Rhodes, and you can test drive that 30 days unconditional money back guarantee. If we take a look at the high volume bar out here inside of the IWM, let's take a look at this. This is likely on a retracement where this will head to. Now we'll just take a look at retracements. That's off of the low from February 5th all the way to the high that was put in on Friday. You'll see the 0.618 retracement takes you to 111.64, right into that high volume bar from February 3rd out there. So the 112.20 area may be a spot where you would find some support. That's actually just kind of a normal move back out here inside of the market. So just a normal move, with the exception of the normal move doesn't have volume off of the highs. And that's why today at 4 o'clock, that's really going to be important to see where it is that this market finally ends its day. Because if volume maintains this pace here, which it usually doesn't do that, but actually could increase, that's a real problem as we take a look at these ETF structures out here. We take a look at the diamonds. Have we done that yet? No, we have not looked at the diamonds. Diamonds so far today, 2.5 million shares to the downside. That's after making a high with 10 million shares. So the diamonds, we're on a pace to do about 12 million or so. We'll see what they do. Now, in the case of the diamonds, they've only made the 0.786 retracement. They actually closed out the session on Friday at 163.02, and 162.86 was the 0.786 retracement. So the diamonds here could, in fact, still be forming an A to B equals CD to the downside. That 1-to-1 A to B equals C to the downside takes you to 151.37 out here. But again, if you have volume off of the high, which we do at the moment, and you start off with a C point the way that it is doing here, what it's really signaling is you'll do more than a 1-to-1 A to B equals CD. And that would say you go all the way back down to the bottom of this longer-term consolidation box that it had broken out of. And that is a Dow Diamond. It says you maybe get down to about the 148 and change level inside of the Dow Diamonds. We'll take a look at some of the Dow stocks. In fact, if I just take a look right now, let's see if we have anything to the upside inside of the Dow. We ought to have something, right? Chevron. So you got Chevron Corp is the only stock here inside the Dow that is green. It is up 11 cents out here, so it may not be too long before Chevron is in the red. So we've looked at I think we've looked at all the ETF structures. Yeah, we have. Now let's go take a look actually at, let's take a look at what's going on inside of the S&P 500. Let's go see what we can find out here. Let's start off by taking a look. We've got the energy sector up in the upper left-hand corner. Let's pull this down here. So the energy sector had gotten back inside and still is inside its rising price channel. This is a rising price channel that comes off of the lows back in 2012, the June lows in 2012. What the XLE, the energy sector, had done was it completed a 1 to 1.618, A to B equals CD to the downside. Price came back up, tested that, wanted to try to get back inside the rising price channel on February 19th. Finally got inside there, was let back into the club on February 24th out here. It is just right now traveling sideways from Friday's close out here. So the energy sector looks to be the strongest of the sectors inside the S&P 500 as we speak right now. In fact, it is the only sector that is slightly green, up 6 pennies. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Stocks popping to the upside today. Looks like pharma, biotech type stocks, Regeneron Pharmaceuticals, REGN, up $8 right now, up 2 3/10%. Questcor Pharmaceuticals up 9%, not 9/10, 9%, up $5 and change. You've got Clovis Oncology, that's up 3.37. I see we've got Potash, CF Industries Holdings, that's up $3.87. IC Potash as well, up $4. So the unrest over in Europe, over in Russia, over in Ukraine right now is a problem, and it could be a little bit long-term problem out here. Google to the downside, leading the charge, off $18 right now. Priceline off 15. Dover Corp off 15 as well. Alliance Data Systems down 9. Chipotle off $6. Tesla down 5. BlackRock Inc. off 5. VIP Shop. Now, VIP Shop, let me see. I think that's one of those stocks that we were following that had formed a potential island bottom. Let me see if we have that out here. I think it was VIP. S is the ticker symbol. Let me see if I can. No, it was not. It's VSI was the ticker symbol. That's the one that's formed this little island reversal bottom out here with a nice sign of strength, nice gap up on February 21st out there. VIS. Who is VIS? Just so I can tell you. VIS. We'll go take a look at the actual stock chart out here. So it is one to be paying attention to. Vanguard Industrials Index Fund. So that's what that ticker symbol is. In any event, let's take a look here at, so I had an email question, somebody saying, hey, what's the market doing here on the short-term basis? The short-term basis I showed during the first hour of the show, the ES Mini. If we take a look at what the ES Mini, you're going to see a little yellow consolidation box. So we had the gap down last night at the open. Prices pushed down into the lows here, about the 1836-ish range. We saw a push down at 8 o'clock into that area. Got down to 1836.50. We saw another push down here at 7 o'clock this morning. Got down to 1836 even Steven. That's the bottom of the box, the top of the box, the top of the consolidation box right now, being the intra-session high, both from 6:30 last evening. That's out at 1847. We can see how that level here is acted as resistance. Again, it's the resistance of the consolidation box. It's not resistance because, well, it's resistance as well because that was the gap down. So, gaps can act as so gaps are your friend because they really are great at being able to help identify support or resistance. In this case here, we've seen that gap tested now twice, two back-to-back sessions, and that has held as resistance. So you've got resistance here at the 1847 level. Now, it's a 10-point consolidation. It says a break topside takes you to about 1857. It says a break downside takes you to about 1820, 1825, 1826, somewhere right around there. So right now, all that the market is really doing is just kind of chopping sideways out here. It's not chopping sideways in things like gold and silver or light sweet crude. Those three commodities are moving topside out here. If we take a look at gold now hitting its head up against this little rising price channel. Of course, getting above that would not be unusual because gold has already broken out of its descending price channel out here. That's the blue line that is going across my screen. That took place on the trading session where you last saw the last test of that area was back on February 4th, so just a month ago. And right now, gold here, looks like it is going to, let's see, volume-wise. Let's see, as it comes into this, says 120,000 contracts up at the highs in October 28, and you're hitting that area with 112,000. So you're coming into that level with some volume. Not too bad. That says 1379 post-haste inside of Goldilocks. If we take a look at silver here, silver had been struggling a bit. It's trying to get over and close above today. It's a descending price channel. That would be right in the area here. If it can close the session out at about $21.74, it would be. Now, what it really needs to do, you'd really like to see it get above the swing point here. Now, that could be set up in A to B equals CD to the upside. And that is the February 24th swing high of $22.18, 59,000 contracts. You have already, at that session, you've already done 32,000. So you're coming into it with, at this stage here, a little bit of light volume at the moment. If we take a look at light sweet crude here, light sweet crude is up over its 0.618 retracement level, which is 104.22. A lot of time left in the trading session out here, but we now could see light sweet crude is now, if it closes at this level, above 104.38, there's really no resistance up until you get into the 107 level. And you know what? If you get into 107, that says, why not go test that shooting star back on August 27th, right around the 105.88 to 109.32. I will tell you this much. This is what I do believe this. When we do see, let's talk a little positive here, right? When we do see a resolution as to what's going on over in the Ukraine and Crimea and what's going on around the world, you're probably going to see light sweet crude drop so fast, so very fast out there. So just make sure you've got stops in on your trades out here. Right now, you do have light sweet crude making a higher high on less relative strength. Now, it's not a problem. It only becomes a problem when you see a reversal candle out here. It has time to try to take care of that divergence out here. But right now, that's the pattern that is set up inside of light sweet crude. If we take a look at natural gas out here, natural gas trading at $4.56. That is the April contract that we're taking a look at. Yeah, actually, this could be forming an A to B equals CD to the downside. This is the daily chart. You got big old key reversal, bearish engulfing session up at the February 24th level out there. If we can see an A, hold on a minute here. If this is to form an A to B equals CD to the downside, the first thing you need to do is take out the swing point low from February 27th. that is at $4.41 out there. Let's go take a look at and see what's going on across the globe. The DAX in Germany, slightly off of its session lows out here. This got all the way back. Yeah, what the DAX in Germany did, the DAX in Germany made a swing point high on January 21st. The low of that was 97.14. It made it all the way up and tested that swing point back on February 26th, rejected that area. I don't have volume to tell you if it was a rejection of a swing point on lighter volume, but that does say, okay, you can't bust it up. What's it going to try to do? It tries to bust them down. That'll take you back into the swing point low, most likely into February the 4th in the 91.66 to 9,071 type range. That is inside the DAX in Germany. We take a look at the FTSE out here. The FTSE, let me pull this back. The FTSE has been trying to crack the 2007 highs, very much like our own New York Stock Exchange. In fact, we ought to take a look at the New York Stock Exchange here momentarily. So you've got the FTSE back in the UK, back inside that range, really been consolidating up at these highs here for quite some time, take you back into the July of last year. You could actually say that, well, you can't say that's the consolidation pattern. I'd have to say been consolidating since July in 2013. Let's, in fact, go take a look and see what's going on inside of the New York Stock Exchange. Let's take a look at this on a couple of different time frames out here. Give me a moment here to try to find the right tab. NYSE. Right now, the New York Stock Exchange, it is trading down. Let's see what we've got here. It's down about 1 full percentage point. It's off 100 points. You've got net declining issues of 1525. The key number to be paying attention to today is 1974, not the year, but net declining issues. If you see more than 1974 or 1974 or more net declining issues, the bears will effectively have taken control of the ball out there. That's something that we haven't been able to say for quite some time. Now, the monthly chart for the New York Stock Exchange, it did just slightly close above its 2007 high, which is 10,387.18. We've seen it close above that level now twice, right? And because we did that back in, it did the month of December as well when it closed at 10,400. So if in the month of March, it can actually hold that level, by the time it's all said and done, on a monthly basis, you will have the New York Stock Exchange actually breaking out of a very large consolidation pattern, because that consolidation pattern takes you into the 4,400 level, and 44 versus 10.4, that is a 6,000-point consolidation area. So we want to be paying attention to this. We'll come back to this on certainly on a daily, weekly, monthly chart. If we take a look at the weekly chart, you'll see the same thing here. Weekly chart so far, not too bad with regard to today's movement. But let's take a look at the day's movement on the daily chart out here. The retracement here, the key area to be watching right now inside of the New York Stock Exchange is going to be the bottom of that swing point from October 11, 2007. That's going to take you to the 10,195 level. If the New York Stock Exchange cracks 10,195, that's going to take you back to the 0.618 level. That's going to be 10,014. And at 10,014, you probably end up getting all the way back down and testing the swing point low on February 3rd. And that's at about the 97.32 level. If it starts to, we start to see these markets crack, and today we're seeing so far volume. We're seeing volume, and it's the volume off of the highs when we take a look at the ETF structures out there. But we have a lot of time left in the trading session. So the New York Stock Exchange, key number 1974 is the number right now. You're at 1510, so it could very easily do that today if things continue to fall apart out here. Let's take a look at some stocks that are actually moving here this morning, both to the upside and to the downside. Let's go see what they are doing here. Let's take a look at to the upside. Let's take a look at Regeneron Pharmaceuticals. Moment here. REGN is the ticker symbol. So you got Intuitive Surgical leading the charge the upside, REGN. And that's up about 2%. That's up $9 and change. But Regeneron Pharmaceuticals is up near its highs, as my recollection. So let's go see what it is doing, where Intuitive Surgical is most definitely not. Now you got Regeneron Pharmaceuticals. It's got a swing point high out here, which is trading into from February 24th. So you talk about a strong sector out here. This is it. 1.2 million shares up at that swing point, and today you're moving into it. You've already done 361,000 shares in an hour's worth of trading, an hour and 15 minutes worth of trading. So, even if you just multiply that times 4, you're moving back into that swing point. That says Regeneron Pharmaceuticals, if it can close at 337 or higher, it ought to go test 348.25 out there. So you've got that moving to the upside. We've got IC, the potash companies out here, ICPT. That's up a nice 1%. Up. Did I get that? ICPT. That's trading out at $416. Let's go see what that is taking on. No, that can't be right. ICPT. What is that big gap out there? That doesn't make any sense. Let me try to do this here. I don't recall. My apologies. So I don't like to have dead air while I'm talking, so we're just going to move on here, and we'll come back. Let's take a look at CF Industry Holdings here. CF is the ticker symbol. Let's go see what that is actually doing out here. CF is up at a new high here today. Let's see if this has got some volume behind its move. So this looks like a new A to B equals CD to the upside. Looks like this may have formed a couple of days ago, maybe on Friday. Its swing point high looks like takes us back to January 16th, 249.10. Yeah, 249.10. Well, it's cleared that. That had 426,000 shares out there. On Friday, it got above it with 965,000 shares. So that confirms a to B equals CD that can... Let's see. Let's put this on a weekly chart. Let's go see what it did on a weekly chart out here. And on a weekly chart, it took out the resistance level of that evening star pattern out here. That was formed on January 17th. The evening star is a 3-candle reversal formation. You get a nice wide green bar in my case here. Nice up-thrusting move that took place out here. The weekend of January 10th, 5.5 million shares, a little sideways, little spinning top type candle out here, and then a big down thrust here on the trading session of January 24th. That said, resistance on a weekly basis was 249.10. 249.10 ought to be a support level. This is CF Industries. Now, if we take a look at volume on that trading session, that had 3.6 million shares, and last week over it with 4.7 million shares. Man, that's a nice A to B equals CD on a weekly chart, because on the weekly chart you would come all the way back down to the candle session here from July the 5th. So CF Industries is probably one you want to be paying attention to, especially if this market after the we settle the war of words, or whatever war it turns out to be over in the Ukraine and into Russia out here. This right now, you've got a confirmed A to B equals CD to the upside inside of CF Industries. That'll take you to 299.84, maybe even up to 321.66. You're trading at 254 as we speak here right now. Let's go see what kind of damage, if any, is being done in Google. Google leading the charge to the downside. It's off $18 here right now. Let's go see if there's any kind of volume behind its move out here. GOOG is the ticker symbol. It is got one moment here. Sorry, it has done volume so far, and the reason why I want to take a look at these is taking a look for any kind of volume off of the highs here. Google, 737,000 shares to the downside thus far after making a high here on February 26th with 1.9 million shares. So volume off of the highs. Never good. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off 156 right now. S&P is down 15. Composite off 41 points. So let's try to recap the day here, what it is that we should be paying attention to. Key is going to be, well, the first place to be focused on is going to be the ES Mini. Right now, really, it's just been traveling sideways, consolidating since last night's open. It's in a 10-point consolidation box. A bust out to the upside here is going to be taking out the resistance, which has held as resistance so far. And that is at 1847. However, break above that says you ought to see a retracement. You ought to see the ES Mini get up to 1857, whereas a close below, a move below 1836. That says the ES Mini should make a move equal to or greater than both the upside and the downside. When you break these consolidations, they're equal to or greater than the actual consolidation pattern. But it looks like the minimum move to the downside would take it about the 1826, 1825 level. So that's one of the things that you're going to be paying attention to. We're going to be paying attention to the VIX index. I don't think we've covered that here during this hour, so let's do that right now. The VIX index is now above the 50-day exponential moving average. It's traveling out at $15.99. The 50-day is $14.80. All serious damage in the markets is done when the VIX is above the 50-day exponential moving average. For me, it's nothing more than a liquidity gauge. It says liquidity starts to dry up inside of the market out here. And then, so that is a second area to watch. Inside the New York Stock Exchange, what you want to be watching is the net declining issues at the end of the day. You're at 1546 right now. If you get more than 1974, boy, now you would have the bears taking control with the VIX being above the 50-day exponential moving average. If anything says tighten your stops if you're long, that's it. Now, of course, it depends on the time frame that you are trading on out here. I'm just referring to right now what is coming, the message of the daily charts out there. So that's a third thing. We want to be paying attention to the euro-yen. Yeah, in the case of the euro-yen, I've been pointing this out. That's why I've taken a neutral stance in my newsletter out here. It's because of the correlation of the euro-yen versus the stock market. There's been a couple of signals out here that have said, how was it that the currency pair was, predicting a day like this or potential unrest over in Ukraine, over in Russia out there? I don't know. I just know that it does. But it didn't really signal what the event is, but what it was telling us was that, hey, we saw the S&P 500. I've got the futures contract up on my screen right now. The S&P 500 has been making higher highs ever since about the February 28th time frame out here. That's the top portion of my chart. Whereas the euro-Japanese yen has actually not been. It's been in a horizontal. It's been able to get February 28-ish type range, but has not been able to crack through there. When you see those divergences enough times, you recognize that the currency pair, it either needs to resolve itself, which it had the opportunity to do on Friday. It had the opportunity on Friday as the markets were breaking out. The euro-yen had the opportunity to break out as well. It did not. It did not. It has not. So now we're going to see this. It's doing what it's supposed to do now, which is the market resolving itself to the downside out here. This does not tell you the extent to which that will last out there. That you've got to go use some other tools. The Dow itself was also giving us a signal out here. A great tool inside of the Dow, one of the best, believe it or not, is the correlation of what happens with the General Electric. And we saw the Dow was moving up. That is coming off of the swing point out here from about, February the 16th, 17th, somewhere like right around there. I can't actually grab the date, utilizing the line chart out here versus the General, which was making lower highs out there. Those divergent patterns, they resolve themselves in the direction of the General. Can't tell you why, just know that they do. Folks, stay tuned. We got our General, Basil Chapman. We've got him up next, and we've got Larry Pesavento. It is Marvelous Monday. That means we've got Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Have a great trading session, folks. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.